The Monetary Policy Committee of the Central Bank of Nigeria earlier this week left its benchmark interest rates unchanged, and all other parameters were also left unchanged. Our central banks across the continent have adopted aggressive monetary policy initiatives in an attempt to boost liquidity in their economies, massively increasing the funds available to commercial banks and introducing debt repayment holidays. Well, this week and next, we'll see a number of African central banks, South Africa, Ghana, Kenya, even Angola, announce its rates decisions. Well, let's talk about all of these with a practice lead, a sub-Saharan African research at Docker Frontier in London, William Atwell. Hello, William. Thank you for joining us. Good afternoon.
Pleasure. Good afternoon to you too.
Now, the Central Bank of Nigeria left its benchmark interest rates unchanged at 12.5% at its July meeting. How, in your opinion, are international investors interpreting the move?
I think international investors weren't entirely surprised by this move. We know that inflation has been continuing to increase each month over the past several months. So there really wasn't much room to ease on interest rates. However, this, of course, is concerning international investors looking at the business environment, very aware the cost of credit is fairly high in Nigeria. And of course, businesses are really struggling with liquidity issues. So looking to perhaps gain loans to be able to see themselves through some of the depths of the coronavirus crisis. So I think they're obviously concerned that businesses are still going to find credit expensive, but not entirely surprised given that the Monetary Policy Committee doesn't really have much room given the inflationary environment. And of course, also given the pressure on the Naira right now. So they're watching the currency very carefully, of course, in light of the recent devaluation of the official rate, but looking to potential further devaluations going on into the next several months.
All right. Now, the South African Reserve Bank holds its next MPC meeting tomorrow. With inflation at its lowest point in 15 years, what are your expectations from the South African Reserve Bank?
So, as we sort of flip to the other end of the continent, it's quite a different set of dynamics at play. Of course, South Africa, the economy also under tremendous pressure due to coronavirus and the global downturn, but their inflation really very low, and there's a lot of scope for the MPC to cut further. So we're expecting in Q3, whether it's tomorrow or whether it's later in the quarter, we do expect another cut, not a dramatic one, perhaps 25 basis points, which would take it down to 3.5%, which is the lowest, would be the lowest rate for well over a decade. So there's certainly scope to do that with inflation, of course, well below the Monetary Policy Committee's target inflation range. So that should provide some cushioning at least, and does, of course, dovetail and complement some of the monetary policy authorities and the government's initiatives to try and extend soft loans and additional credit for businesses and households, of course, as well, to see them through the coronavirus crisis.
Now, interest rate decisions are also coming up in Ghana, we have Kenya, and of course Angola in the next couple of days. Are there any consistent patterns in terms of region-wide monetary policy you could comment on?
Yeah, so the pattern is really one of consistency and maintaining the status quo for the time being. There are a number of course, different drivers in each of these markets. They all have very different fundamentals. So in Kenya, inflation has begun to stabilize somewhat, but actually the initiatives that the monetary policy authorities there have taken are already having the effects they want. Credit growth has been fairly steady, and Kenya isn't seeing this kind of downturn that we're seeing in, say, Nigeria or South Africa. So the economic emergency isn't nearly as severe, and so less pressure to cut. So we're not expecting any cuts there. In Ghana and Angola, of course, they're also, like Nigeria, dealing with much higher inflation rates, very high inflation rates in the case of Angola. So really not much scope to cut more. And their currencies are, of course, under a lot of pressure as well. So we're not expecting interest rate cuts from those markets either. And of course, from an international business perspective, they're continuing to be concerned around access to credit, which I know has been a difficulty for companies in both of those markets and will really continue to be so into the next 6 months and ahead.
All right, we'll keep a tab on those Monetary Policy Committee meetings coming up in a couple of days from now. Thank you very much for your time, William.
My pleasure.
William Artwell is the practice lead at Sub-Saharan Africa Research at Docker Frontier in London.